In today's episode, I will answer the question why VTSAX is popular and how to make money from VTSAX. I will show you how to multiply your $3,000 to $60,000 and what time it will take to multiply your money. I will also show you the exact calculations and I'll do a comparison if you decide to save money instead of investing money. If you don't have the 3,000 initial investment amount, I'll give you ideas on how to get that initial sum. I will also answer the question on whether you can invest in VTSAX from anywhere in the world and how to make money from similar opportunities no matter your location. By the end of this financial education video, I will take you from an illiterate beginner investor to a knowledgeable investor in VTSAX, making money work for you so you can stop being a slave to work and attain financial freedom. Let's start. So let's start with the basics. What is VTSAX and what does VTSAX stand for in full? VTSAX in full is the Vanguard Total Market Index Fund Admiral shares. Now, don't let those long words or strange words scare you. I will explain everything throughout this episode. So, what do you mean by when you say Admiral share class? Okay. At Vanguard, Admiral shares are a share class of a mutual fund like VTSAX that offers a lower expense ratio. Those shares that have a lower expense ratio, they are in that class. So, they are a share of a mutual funder that offers a lower expense ratio in exchange for a minimum initial investment. And for VTSAX, it is $3,000. So when you talk about the expense ratio, it is the annual fee a fund charges because your money is going to stay in that account for some time. So it is the annual fee a fund charges and it is calculated as a percentage of your investment. And note that a lower expense ratio helps returns grow faster. So always check your expense ratio on your investments. You're at a better position if you get an investment with a lower expense ratio. And for VTSAX, the expense ratio is 0.04%. So now that you have understood that, what is VTSAX? VTSAX, it's a mutual fund offered by Vanguard that aims to track the CRSP US Total Market Index, covering all US publicly traded companies across the large cap, mid cap, and small cap companies of different growth and value styles. Okay, hold on. Okay. The CRSP US Market Index is the benchmark index that VTSAX tracks. I did an episode to explain more about indexes, okay? Indices. Remember, an index is a list, okay? So check my previous episodes to learn more. So the CRSP US Total Market Index represents nearly all US traded companies, whether it is large, it is mid, or it is small, across different styles of growth and value. So that you can understand, let me explain what large, mid, and small cap means, okay? These terms refer to market capitalization tiers, okay? Large cap are the big, well-established companies, for example, Apple. Mid cap are medium-sized firms. Small cap are smaller companies. VTSAX includes all three to provide broad exposure. So beginners may confuse mutual funds and an ETF. So you may have the question, is VTSAX a mutual fund or an ETF? VTSAX is a mutual fund, Admiral Shares class, okay? But there's a nearly identical ETF version called VTI with the same holdings, but it's traded intraday and the ratio is lower. For VTSAX, I told you the expense ratio is 0.04%, but for VTI, it is 0.03%. Also, if you need to know more about ETF, please watch the introduction episode on ETF. So our focus today is on VTSAX. So let's cover some important fund details. How do I invest in VTSAX as a beginner investing? The minimum investment is $3,000. That's the minimum to open the VTSAX account, okay? And the expense ratio I've told you is 0.04%, which is very low for broad market exposure. So it means you have an opportunity to invest broadly, even if you have the low capital investment. And believe me, $3,000 is low capital investment because, for instance, hedge funds may require upwards of $250,000. So, therefore, investing broadly in VTSAX gives you an opportunity to make money from your money working for you. And you may be interested to know maybe what are the holdings of VTSAX and maybe what is the Tesla exposure in VTSAX. VTSAX holds approximately 3,000 to 600 to 3,800 US stocks, okay? And Tesla makes up about 1.6% of the fund's assets. Then it spreads over all the major US sectors, the tech, the healthcare, financial, industrial, etc. All of them are in VTSAX. And the top holdings include Apple, Microsoft, Amazon, Tesla. Okay. So it's good to look at the historical performance so that it can help you to judge the future. So you can be interested to know what is the 10-year average return on VTSAX. Okay. So over the past 10 years, VTSAX has returned about 13% per year, 12 to 13% per year. That means that if you had invested 10 years ago and left it alone, okay, invested money for 10 years, you would have grown your money by an average of 13% every year. But remember, you have to adjust for inflation. That is the rising cost of living. So the real return is around 6% per year. So what we are using in this example, in this episode, will be the baseline numbers. So you need to understand how the calculations are done. But first, before we get there, you need to understand nominal CAGR. Okay? CAGR stands for the compound annual growth rate. It's a fancy way of showing how fast your money grows on average per year over time. Then, nominal CAGR means it does not adjust for inflation. It's the raw return. So for VTSAX, the nominal CAGR since 2000 is about 8.4% per year. And when I say annualized return, annual return is just another term for average yearly return. It shows how much your money grows on average per year. And sometimes some years may be higher, some years may be lower. For VTSAX, since 2000, this number has been 8.4 annually, and it has shown steady growth over time. So most beginners are told to go for investments that pay dividends. At least you can see your money doing something when you see some returns, some money, some cash deposited into your account. So does VTSAX pay dividends and how much? Yes, VTSAX pays dividends. So let me just explain what dividends are so that you understand it once and for all. What are dividends? Dividends are cash payments you receive from a company when it shares part of its profits with investors. Okay. So because VTSAX invests in thousands of US companies, when those companies make profits, they pay out dividends. Then VTSAX passes those dividend payments to you, the investor, usually every 3 months, or you say quarterly. So as of mid 2025, the dividend yield, what you get, about it was about 1.20% per year. That means that if you invest 10,000, you'd get about 190 to $120 in dividend income, okay, per year. That is the annual payout per share will be $1.79. So it's paid quarterly, that is every 3 months. That's roughly $0.44 per share every month. So note that I've said per share. But just to bring this into perspective, now let's say you invested 3,000. Does it mean that you have 3,000 shares? No. Investing 3,000 in VTSAX does not mean you are buying 3,000 shares. Let me explain. VTSAX is a mutual fund, not a stock. So when you invest money into it, you are buying shares of the fund, but the number of shares you get depends on the current share price. Okay? Let's say the current VTSAX share price is 120 per share. So I'll just use an example because prices change daily. If you invest the $3,000, the number of shares you would get would be 3,000 divided by 120, which would be 25 shares. So you'd own 25 shares, not 3,000 shares. So what is the net asset value? The net asset value NAV or mutual fund share price is the price of one share of the fund. Okay. Your $3,000 investment buys as many shares as your money allows at the current price. So the number of shares you can buy varies depending on the day's price. But remember, you can buy fractional shares. So even $100 can still get you part of a share. You don't need to buy whole shares because Vanguard lets you buy fractional shares of VTSAX. So even if the price is at $120 and you want to invest $50, and that is after you are in, not before, you still get fractional shares. So remember, you are investing dollars, not buying share by share like with stocks. Once you've made your independent decision to invest, you will check the current price on Vanguard's official site or Morningstar. So I'll give you a walkthrough. Just let's get the basics out first, okay? Also, before you buy VTSAX, you have to decide which account you're going to use. So your account is like it's like a container where you're going to keep your funds, okay? You have three options. One, a taxable brokerage account. That's a regular investment account. You can put in as much money as you want, take it out at any time, but you'll pay taxes on profits each year. Then there's a traditional IRA, a retirement account, okay? You can deduct your contributions from your taxes now, but you'll pay taxes later when you take your money out in retirement. Then the third option is a Roth IRA, which is also a retirement account. So for Roth IRA, you will pay taxes on the money before you invest. But your investments will grow tax free and you don't pay taxes when you withdraw in retirement. So that's up to you to decide which account you will use. In a moment, we'll get to the calculation so you see how your money will get from $3,000 to $60,000. But before we get there, I want to tell you something about the dividend yield. So you may ask, does the dividend yield change over time or does it stay the same? You got in when the dividend yield was good and now you expect the same performance. No. The dividend yield goes up and down depending on the economy. Okay. When the economy is performing well, everything is good, at a good place, the dividend yield will be higher. Like in the early years, the dividend yield was higher at 2.1%. When we had COVID, during that COVID time, and there was companies were closing down and the profits were they were not getting good profits, there was problem. The dividend yield went to as low as 0.01%. So at the moment I did my research, the dividend yield is about 1.2%, but now it changes. It depends on the economy. So finally, when they declare dividends, what happens to the dividends? You can choose one of two things. One, you can reinvest, and that means you automatically buy more VTSAX shares, and you can even set your account to to default just to reinvest. Or two, you can choose to receive cash. That is also a choice, because Vanguard can pay the dividend straight to your linked bank account. So even though the dividends from VTSAX are not that high, they're not very high, they are reliable and they add extra income on top of your funds growth, okay? So most investors choose to reinvest their dividends so that they can grow their money faster because your money is just growing in that account without you having to do anything extra, okay? Finally, your basic math skills should pay you back right now. We've gotten to the calculations. So I want you to see how it works. If you invest the $3,000, so we are assuming an 8.4 nominal CAGR. Now you understand nominal CAGR and all those terms. In 5 years, we say the future value in 5 years will be $4,714. The 3,000 into brackets, I will explain the formula. I just want you to see how it is written. Into brackets 1 plus 0.084 raised to the power of 5. 5 is the number of years, okay? And if it was in 10 years, it would be 7,410. So this is how we are calculating the annual rate of return, okay? It is 1 plus 0.084 raised to the power of 5 is the number of years. So it's like 1.084 times 1.085 times. So that is what you add to the initial 3,000 you invested. So for a period of 5 years, you'll only make the 4,714 dollars. We are still not at 60,000. We are still getting there. So just hold on. So this is where we want to be smart and scale up our money. So you invested 3,000, you opened the account, you invested 3,000 and you are in. But then you decide to add 300 every month for 10 years. Now not 3,000. And by the way, it's not a must you add, but you can choose now to scale up, okay? So you'll add 300 every month for 3 years. Remember, VTSAX grows at 8.4 average annual return, huh? And it's the nominal CAGR. Okay, so you will use that formula there. Don't worry, don't be afraid. You're not the one, you'll not be calculating, you'll just be checking your account. So I'm just showing the formula how you're going to get to the 60,000. So I meant you're adding 300 every month for 10 years, okay? Not for 3 years. So the monthly rate of return, remember we've been talking about the annual rate. Now the monthly rate of return, the 0.7% is just the 8.4 you divide by 12. And the total number of months for the 10 years is 120 months, okay? So for the initial amount, the 3,000, we want to calculate what we will get at the end of 10 years using the monthly rate of return at 0.7%. And using that formula that you see there, you'll get $6,756. We are still not at 60,000, we are getting there. First, you have the $6,756. So now you have your $6,756, okay? That's how much money you have made, how much profit you have made from the initial 3,000. Now let's see the future value of your $300 deposits every month. Using the formula that you see on the screen there again, you will get 53,709. Now, to get the future value of your account, now you gave the initial 3,000 and 300 every month for 10 years. It will be the $6,756 plus $53,709 to get you to 60,465. Yeah! Finally, we got to the 60,000. You see how it works? So you have extra money on top. Huh? I'll show you why you have extra money. Just hold on. Because I want to do a comparison. If you choose to invest versus if you choose just to save your money. So remember, people, the advantage of VTSAX is that you get broad exposure in one fund, and it's a very low cost fund. It's just the expense ratio is just 0.04%. Then it's easy. You set it and forget it. You just set it even to default automatic. And it's ideal for retirement because you just get your funds later. The only hard thing, the disadvantage is that it requires the 300, the 3,000 initial amount to get in. And then it is also slightly tax efficient than ETF. Later on, I will explain what I mean by tax efficient in a different episode. Right now, let me just introduce everything that you need to know, okay? So beginners like it because of the diversification and the low fees, and it has been returning good returns over the years, okay? Suppose you decide to save money. You see that if you start with the initial 3,000, then you top up 300 every month for 10 years, that is 120 months. Using the formula you see on the screen, you'll only get to 39,000, okay? But we got to 60,465. So you have an extra 21,465. So should you save or invest? So if you don't have the $3,000 right now, what can you do? So here are some ideas that you can use. Some of these have helped me. So check which one suits you best. One, if your take home pay is about around $4,000, it may be higher or lower. Then 20% is supposed to go to savings. And that is approximately like $800. If you save that $800 for 4 months, then it means you'll have reached your goal to get the first 3,000. Sell something online. You hear people saying this one I bought it from Facebook Marketplace. So you can sell collectibles, you can sell vintage clothes, sell something so that you can get the $3,000. Next time you get a tax refund or some gifts or some bonuses, save that money. Let it go towards the $3,000. In your budget, you have a portion for once. By the way, if you want to watch more episodes on budgeting as a beginner, please check my other videos. Now, reduce on your wants so that you can save that $3,000. Decide you're not going to eat out. Decide you're going to leave out some subscriptions just to get the first $3,000. You may have a side hustle, and from your side hustle, there's an amount you're supposed to pay yourself. You're supposed to use that money for whatever you want to do. So that money that you pay yourself, save it and then channel it towards the $3,000. Look for some gigs. I do writing gigs, I do editing. Do some gigs. That 100, 200, 300, gather it together, you'll get the $300. Congratulations, finally you made it to the end. But how do you withdraw your money from VTSAX? So I want to share a few simple rules, okay? Number one, remember you can always top up your money. $1, $2, $10, $50. You can top up it. You are free to top up your money so that you can make your account grow faster. Second, what if you want out? You want to withdraw, okay? You want your money now. I want to get out of VTSAX. You can always withdraw your money, okay? there is no there is no maturity period with VTSAX, okay? So you can take your money from VTSAX before the maturity period, like 5 years or 10 years, because VTSAX is not a fixed term investment. It is a mutual fund. So you can sell or redeem your shares anytime during market hours, Monday to Friday. There is no penalty for withdrawing. But are there any charges or fees when you withdraw your money from VTSAX? So redemption means when an investor takes out their money out of a mutual fund. And when this happens from a mutual fund, the fund may have to sell some stocks to give you your money. So this can cause capital gains, and those gains get passed on to all other investors in the fund, you included, which will trigger a tax bill. So VTSAX does not charge a redemption fee if you withdraw your money unless you sell shares held for less than 2 months, in which case a 0.25% fee may apply. Okay. So, do you owe any taxes? If you sell your shares at a profit, you may owe capital gains tax. And short term capital gains, that is, you've held it for less than 1 year, are taxed like regular income. While long term capital gains, you've held it for more than a year, are taxed at a lower rate, that is 0 to 20%, depending on your income. Okay. So when you are selling or withdrawing, note that you may owe capital gains tax only on the profit, not on the total withdrawal. Okay. So no tax on withdrawals if there's no profit or withdraw less than what you invested. Okay. And capital gains is when you sell a stock at a profit. That is what you mean by capital gains. Okay. Also, with VTSAX, it is generally intended for US residents, but I'm going to share in another video what you can do if you're outside the US. Okay, I told you that VTSAX is less tax efficient. Now, I'll share with you a tax efficient product called VTI in the next episode.